Last quarter, we saw the highest market share of bidding wars in the past 7 years.
But at the same time, 29.7% of sellers cut their asking price. So what's going on?
We'll explain everything, and we'll talk about how the recent election may impact our market.
On the Real Talk NYC Real Estate Podcast with John and Jonathan. So jumping right in, at top of mind is always interest rates. We saw a dramatic decrease from 6.95% at the beginning of July to just over 6% at the end of September.
Most of the figures we're going to talk about today, we're actually looking at what happened the previous quarter that closed in the third quarter. So second quarter contracts closing in the third quarter. We'll see the repercussion of that next quarter.
Even though the interest rates decreased from just under 7% to just over 6%, we didn't see a huge bump in the numbers. The people most affected, under $1 million, we only saw a 3.4 annual increase in mortgage sales. That would indicate to me that rates have not dropped significantly enough to bump the numbers much further.
Yeah.
Overall, mortgage sales actually fell 9.7% between 2024 and 2023.
Yeah, well, and I think that's because what we were talking about at that time was, well, the Fed was originally going to cut interest rates earlier on in the year. Then that got pushed out. So there was this lack of confidence in what was going to happen. People were just sort of waiting. And then what happened is that interest rate discussion, let's say, started to run into the last couple of months of the election. That drew a lot of attention and sort of diverted things.
Even though the Fed funds rate did decrease yet another quarter point, we've not seen that reflective in the interest rates, and we've actually seen them ticked up.
So we talk about that correlation between the two, but it's not direct. Just because the Fed cuts interest rates, yes, eventually that the hopes are is that brings down mortgage interest rates, but we just saw them decrease the federal fund rate and mortgage interest rates went up.
It's even more of a reason for people to tune into next quarter's market numbers. Okay, great.
So moving on to closed sales, we had almost 2,800 closed sales this year. The Q2 to Q3 quarter over quarter change was just about 7%. Last year, we had a much bigger uptick. It really depends on what's going on in our world, in our market, as to whether it goes up from Q2 to Q3, but significant difference from 2023 versus 2024 here in that quarter over quarter change.
Right. And so overall sales year over year fell about 2.5% due to uncertainty in our marketplace, the higher interest rates, et cetera. So, and I think also the impending election had a lot of bearing on that, but not a dramatic decrease in sales.
Yeah, I think we've been in the status quo for the last, all of this year. I think those two things, the interest rates and the election, have been the sort of overbearing feelings out there. And we always talk about uncertainty is what the number one thing that buyers don't want to buy in. Sellers don't want to sell in unless they have to. So we've seen those apartments that have needed those renovations also starting to move a bit just through talking to other brokers, et cetera. Despite interest rates still being in a funny place and the impending election getting so much closer, there's not a lot of rhyme or reason. The only thing I can equate to that is you always have your early buyers. Correct. There's a wave before the market starts to shift, and those are the buyers that think they can see down the path a little bit further than the rest, and they're less risk averse, and they're okay jumping in because their needs are there. An expanding family or a downsizing number of people in the household, etc.
Yeah, that's one thing that came to mind is that I think we were hoping that the decrease in the interest rates would generate more than a 3.4% increase in that first-time buyer, the buyer under $1 million. We kept saying date the rate and marry the home, and we haven't really seen that take hold, I think, in our marketplace yet. Our great hope would be to have those rates continue to drop, but that's more will be revealed in going forward, particularly into 2025 with new policies put in place. It's just too hard to speculate right now.
Yeah. And we did pull a few contract signed figures from our listing system, that resource. So we pulled some stats from that just to get a sense of what's happened in the contract signed portion. So looking at those contract signed figures, Q3 of 23 versus Q3 of 24, there was an increase in contract signed of 13.5%.
Right.
That's a significant number.
Yes.
Now, we won't see that in the sold and closed figures until next quarter, so it'll be interesting to see how that transcends. We should see that have an uptick in the actual closed sales.
Right.
I do expect that the fourth quarterly numbers should move in a positive way, let's say.
And between September and October, month over month, we saw a huge increase in contract signs. And so looking outside of the quarterly statistics, we also examined between October and September, and we saw a huge 37% increase in the number of contracts being signed month over month. And then we looked back at 2023 and we saw seasonality had something to do with it because it was an increase of 34% between September to October.
Yeah, which
but nevertheless, it makes sense.
There's a lot of things that happen in September. There's a lot of holidays.
That's
there's,
correct.
Kids getting back to school. There's a lot of people coming back from their summer houses.
That's
and,
correct.
Like getting settled back in the city and such.
And
so
October is really the pinnacle of the fall market.
Yeah.
So when we look at the listing inventory at 7,200 plus units, we're down 10.2% quarter over quarter, but we're basically flat year over year. And so we've seen actual slight decrease in our monthly inventory numbers 5 out of the last 6 quarters. And we are in where we saw studio and one-bedroom apartments, inventory actually rose, which would indicate that the mortgage rates have not had that great of a difference in terms of first-time buyers absorbing the inventory.
Yeah. And so inventories remain very similar to what it has for a long time. And if you back out and look at the 10-year statistics, so for Q3 inventory, we're like 1% above what the average is over the last 10 third quarter figures. So it's
pretty much
par for the course.
Yeah, static.
Same old.
That's correct. There's been no major calamity, no major impulse to increase or decrease inventory.
Yeah.
One thing that we also looked at were the luxury inventory numbers. So luxury inventory numbers are up a little over 5%.
Not a huge shift.
Not a huge shift and a steady market.
Yeah. The one thing that we mentioned in the intro is the number of bidding wars during that quarter, which, again, doesn't come to fruition. You don't really see that until it's sold and closed because we don't even put out contract figures even amongst brokers. I mean, rarely will we even share that with somebody, with another broker, until it actually closes. So we saw almost 10% of the deals done being a bidding war, even though negotiability or the percentage above the result of that bidding war was smaller than what we typically see, only a couple percent versus traditionally it's been 4%. But I think that lends to where the market is, sellers coming to more realistic prices, buyers still being apprehensive, so they'll get involved in a bidding war, but they're not as gung-ho to throw more money at a particular unit.
I think that, to your point, that sellers coming on the market who are really price sensitive and realistic to the marketplace, if the apartment is, let's say, really beautifully renovated or is a kind of a coveted line in a building or in a specific location, some sellers are being rewarded by buyers jumping in and bidding those apartments up, albeit the buyers are still resistant to throwing out these really high prices.
And we could extrapolate, like one of the things that we've talked about is this glut of inventory that need a lot of work and such. So one assumption you could make is brokers talking to their clients and saying, listen, you have a beautiful apartment. They're in short supply these days. Get it on the market. If you're going to sell over the next year, do it now because there's such a shortage of those really beautiful apartments that are just bring your toothbrush.
Correct.
And maybe that helped balloon those bidding wars.
And so just to wrap up, days on market actually fell a little over 9% quarter over quarter, but has increased a little over 2% year over year. So if we look at the quarterly numbers, that would say to me that it's a result of seasonality, I think, and sellers pricing their apartments
a little bit more
realistically. Yeah.
Overall sales fell year over year. I'm not surprised by that. I think there's so much tumultuousness in our world in general that with that impending election, I'm not surprised that presidential election year being a transition year and a pullback in the market, that's all we're seeing here. And of course, New York is a very liberal town. What are going to be the repercussions here of Republican-led now all 3 branches of government? It has yet to be seen. Will there be big swings in terms of what the incoming president will do? We don't know. So the jury's going to be out. I think the first quarter, as he takes office and we start to see those first 100 days that we always talk about, a new president taking the helm, and I think have a big effect on our market as a whole. But we shall see.
The takeaway here in third quarter for me is that it's, again, business as usual in this state of the market, meaning we had gotten very complacent, I think, at 2 and 3% interest rates in our marketplace, and that terrain has changed dramatically. So this increase of interest rates always, I think we almost capped out at 8%, and now we're kind of slowly coming back down. It's put a major drag on our marketplace. Numbers are not big swings either way. I think that the rates coming down have had a small impact on the lower end of the marketplace, but not as dramatic of an impact as we've seen.
Yeah, and I would say it's not necessarily the interest rates coming down, it's stabilizing a bit. And I think also it's the effect wearing off on people. Those 2 and 3% interest rates are getting further in the back, in the memory.
New market climate.
Yeah, so as that moves away, okay, now we're bouncing between 6 and 8%. Okay, that's the new norm. March of 22, when the first interest rates started to go up, everybody was like, but wait, 2 or 3%. No, that's not normal. That's not sustainable, even though we saw it sustained for many, many years. We're now getting back to a place of the new normal. You're not going to get a 3% interest rate or 2.5% interest rate. You're going to be double to triple that.
Correct.
But that's a healthy market.
I also feel, in terms of our own business, that some buyers are apprehensive. They're looking for the deal in the marketplace. I think that apartments which do need renovation, if they're not priced to the marketplace, sellers are going to have to be prepared to take lower numbers on their unrenovated homes. And if they need to sell the home, they have to get to the marketplace. That can be challenging on the list side of it for the sellers. I do encourage the buyers to continue to date the rate and to marry the home. There are some really good apartments on the market. If you have the stomach to renovate, you can get some very, very good deals in our marketplace.
Yeah.
As we've seen, the sellers who are really, really going to the market, listening to their brokers and pricing to the market are being rewarded, particularly the homes that are renovated. It's not as though the market is revving up for some great end-of-year finale, so to speak.
We always talk about the length of a negotiation. So typically, the longer the time within a negotiation, from the first offer made to acceptance of that offer and how many back and forths, etc. We've had a series of long negotiations,
Very
which
much.
Usually the longer they are, the less success there is to a negotiation. And we've had a number of protracted negotiations that ended up coming together. That's a sign of buyers being like, okay, this is where we're at, this is what it is, and reluctantly getting to the place of signing that contract.
Correct. And in some circumstances, we've had the buyer say, no, I'm not going to move up, and the sellers say, no, I'm not going to move down, and then people reconsider their position. That's correct. And the deal can get hammered out. So more indication that sellers need a good real estate agent and buyers need a really good real estate to help negotiate.
Yeah.
So
at the end of the day,
give us a call.
Depending on what you're looking for, it's very much driven by inventory. Your need matched with the inventory. So if you're looking for something in a small geographic area, if you're looking for an apartment that has a very specific amenity to it, whether that's a big view of something in particular or what have you, I think we're getting back to a place where like people find the property and then they'll transact. So we need more inventory though, good inventory. That's what I would say.
We're working on it.
So specifically buyer takeaways. Mortgage interest rates are going to continue to be tumultuous. A lot of it depends on what happens with the new administration, which we won't really know until we get through the first quarter of next year. If you need to buy and you find the right property, make an offer. Depending on that property, take guidance and try to transact on it, because I don't think there's going to be a significant change in our market. I don't think there's going to be a huge swing one way or the other. I mean, I hope there's a huge swing in one direction, which is everything frees up and more people start to transact. But we won't know, and interest rates are not historically high. So if you find the property, especially if you're a primary user and you have a long timeline that you're going to own that property, it's not a bad time to try to hammer out a good deal and transact.
Exactly. And date the rate and marry the home. I love that expression. It's true, though. Sellers, one must price realistically in this marketplace with not grand ambition. We have a pretty even amount of buyers and sellers in this marketplace. If you need to sell the apartment, then sell it and get to the market. That can be the biggest challenge for the sellers when their apartments are sitting on the market 5, 6, 8 months on the marketplace and they want to resist reducing their price. The market has spoken. So take the guidance and get to the market. We've had sellers who have been really reluctant and then they say, we need to sell the apartment. What do we do? They take our guidance and sometimes they have to reduce more than one time, which can become more challenging. But the market will always respond once they get to a certain point. So that's the best thing that I can say as far as sellers go.
Take your real estate agent's guidance when it comes to staging, cleaning out the apartment, making it present as best as possible.
Absolutely. And in our final recap, what we are certain of is that there are a lot of uncertainties moving forward in our marketplace.
Thus is life.
That's right, but we're boots on the ground. This is what we do on a day in and day out basis, working with buyers, sellers, tenants, landlords, counseling the buyer, counseling the sellers, and we have a very good track record at it.
While we can say, listen, if you're a buyer, transact. If you're a seller, bring your price down and transact. It has to marry with your specific situation.
Exactly.
And then, of course, layered on top of that are all the feelings that come with the election we just went through, which,
we'll talk about a little bit later, right?
Yeah, we're going to see what happens.
In our next episode.
Tune in.
If you're a listener, that's why they tune into Real Talk, because that's what they get, right?
That's
rational, right? We're not BSing. It's Real Talk. Thanks so much for, again, tuning into Real Talk NYC Real Estate with John and Jonathan. It's great to see you, Jonathan. So for now, be healthy, safe, and most of all,
remain in gratitude. We'll see you next time.